Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking May crude oil futures, which settled at 53.06, down about 6 cents, still above the 53 level. It's a psychologically important level, which if you've heard me talk before, you know I don't really care about that too much. I'm more looking for us to get below around 52.75 to consider that we might be headed back down, but it doesn't feel that way right now. You heard enough about the EIA figures yesterday, but let's get into a little bit of the EIA detail. Refineries are acting at 91% capacity right now. They have the capability of going as high as 95, 96% before a rush of crude oil would actually drown them. So they won't be taking crude oil, and if they get to that point, you'll see the crude oil stockpiles rise again, regardless of the demand, because there's only so much refinery capacity. U.S. output is up 55,000 barrels per day. So again, these are things that could potentially build the supply of crude oil. We had our first draw in yesterday's numbers and yesterday's EIA numbers. We've had API, American Petroleum Institute numbers before. First draw, and it was a significant draw along with the draw of gasoline, kept a little bit of a bid under prices. But more important to the bid that you saw, and again, today was essentially unchanged, but more important to the bid what you saw, let's take a look at the Saudi Arabia's finances a little bit. Saudi finances actually matter for oil prices right now. Saudi Arabia, as you've probably heard, has recommended to OPEC that they extend the cuts another 6 months. It's a good time for them to be doing that. If they extend the cuts now, while there's a geopolitical bid underneath crude oil, and that's what this is, it's a geopolitical bid that has pushed crude oil up. When you've got trouble in that region, crude oil suffers, whether it's a supply and demand issue or not. If they actually were to extend the production cuts now, you could see that spike above 60 that they've been looking for. They have recommended that to OPEC. Now, Saudi Arabia issued an $8 billion bond. There was $33 billion in requests for that bond. So there's an appetite for this. This is a second bond issuance they've done, and they'd never done those before. So 2 in a row is interesting, considering that the first one they did a few months back was for $5 billion. This one was for $8 billion. And again, there's demand for these particular bonds. Very interesting. We're looking at Saudi Aramco, which is the royal family owned, the national owned oil company of Saudi Arabia. Their value, if we get crude oil prices up above $55, $60, reaches into $1 trillion. It's already expected to be the largest IPO ever. Saudi Arabia really has sort of a personal interest as a nation to get oil prices up. So I do expect the oil production cut to be extended, at least with OPEC, maybe not with the non-OPEC members. But I expect more cheating to go on if that actually happens. We've already seen significant cheating, but the overall production cuts in terms of getting to that level have been a success. Having said that, U.S. production continues to grow, and they're really going to financially bolster the U.S. producers with these prices. So it could change the dynamic of oil supply and demand for a decade to come if this continues. Be interesting to watch. Lastly, Baker Hughes rig counts came out today, 1 day early due to the religious holidays over the weekend. So they released the rig counts up 8. That's the 13th week in a row of rig count rises. And if you take away the 2 negative weeks that we saw kind of splattered in there, it's really closer to about 30 to 35 weeks of rig rises. We've had only 3 down weeks in that period of time. We're now back above the 640 rig level, substantially above it. So that production is going to continue. Now, the rig counts are a little misleading, because whenever these kinds of things happen, you always sort of reopen and drill your most productive rigs first. So even the trickle in that we've seen of rig count growths won't amount to as much production, but it is still increased production. U.S. is on its way to 9.3 million barrels a day. Not there yet, but with the 55,000 increase that we saw in U.S. output, they're on the right road. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.